And we are live here Wednesday, 11/20/2019, and it's Tackle Trading's Halftime Report, a daily stock market show where we get into much more than just the stock market. Commodities, oil, you name it, on anything under the sun that affects financial markets, we're going to be talking about. And there's not a lot going on today. Before we get going too far, though, a couple quick notes. Number one, if you're Team Tackle and you're here every day, it's always great to see you. Hashtag Team Tackle right in the chat. If you are new to our channel, always give us the subscribe and click the bell so that you can join us each and every day. And if you want to join our pro member community, there's a standard offer. We put it in there every day. There's no reason to wait on it. 15-day trial. And Matt, there's a lot of things we do in that pro community, including the labs, the lounges, the nightly shows, those type of things, and our reports. And there's a couple of good stock picks from the reports that are triggering here today that I like. And we might talk about them at the end of the show. Matty, how you doing this morning?
Tim, I'm doing really good. Excited to be here with the crew. It's one of those days where it's a very boring day in the marketplace. Not a lot happening in the marketplace right now. And the first 2-day pullback that we've had in the course of the last, month and a half. So the only question I have, Tim, are you buying the dip?
Hold on, time out. You just said pullback. I heard it.
I did it on purpose.
I don't know if you did. I don't know if you did.
The reason they're getting us right now.
You did not get my sarcasm obvious.
Pre-production.
You did not get my
There's an argument as to whether you even refer to these 2 days as a pullback. And Matt was like, don't you dare. It's not a pullback.
Listen, no, I was obviously being sarcastic with the opening here. But no, I mean, are you buying the dip here, T?
No,
I mean, that's
I'm
the
not
only thing we get. Obviously, I'm being facetious here, but no, I mean, I'm doing fantastic today, Tim. Doing a lot better than the market is. Very, very boring day in the marketplace. And we talked about this, on Monday, and we talked about it again yesterday. But this is going to be a boring week in the marketplace. Yeah. There is just not a lot of economic activity. There's not a lot of earnings out there. We do have a couple earnings to cover, obviously, here today. But it's just going to be one of those light type weeks in the marketplace. And that's what we've seen in the last 3 days. Just doji, 3 in a row.
Yeah. Am I buying the dip? I'm not adding Delta to my account. No, that's not going to happen here today. If I added one trade as a swing trade or something like that, I absolutely could do that. There's a couple of candidates from our stock and options report that I'm liking here today that are, as a trader, a swing trade, in my opinion, is not the definition of buying the dip. Am I going to go buy the market aggressively and get into new positions and use new capital? No, I'm not going to do that. What about you?
No, of course not. I was being sarcastic about Twitterverse.
Are they all kind of going crazy about how this is a nice little pullback and it's going to run and you're finally getting a discount?
Anytime you have any type of negative news, and this is amazing, Tim. To me, this is absolutely fundamentally amazing what we're seeing in the market over the last 6 weeks. Ever since phase one of that trade deal was announced, there has been not one piece of negative trade news that the market has sold. Not one piece. And it doesn't mean they don't exist. They obviously have existed. China has been expressing doubts about this trade war, about phase one of the trade deal for now 3 to 4 weeks now. But every time we see news come out, you see the market rise intraday. Okay. And what we saw here on the overnight action, Tim, this is just absolutely no type of selling. But what we saw in the overnight action was, the Senate and the Congress passes an agreement. I believe it's called the Hong Kong Human Rights and Democracy Act, and big ups for the United States Congress for passing this. But basically what the act states, and correct me if I'm wrong, that they can pull trade away from China. Congress can pull trade away from China if they don't start acting, like civil, decent human beings with the Hong Kong situation. And for those of you, that aren't apprised of what's going on in Hong Kong, obviously massive democratic protests are happening in Hong Kong. Hong Kong's been a democratic wing of the Chinese government since, Great Britain passed it on to them in 97 or in 98. And so you got the Hong Kong people, fighting for democracy, and obviously China's clashing with them, and the United States Congress acted, and, golf clap here. Okay. Yeah. Americans, we love our democracy, and we should support democracy from around the world, and especially in Hong Kong. Hong Kong's one of those most capitalistic democratic nations out there. So, I'm glad to see the U.S. Congress support that. I'm glad to see the U.S. Congress act in the Hong Kong Act. And, China responds very angrily. right? They responded on the overnight. Oh, how dare you, discuss our sovereign,
Wait,
no, it's not.
are you telling me that communists are upset when you tell them they can't act communistically?
I think that's what they're like Wall Street, a bunch of whiny little babies.
They're like, we want this power over here, and we're like, wait, no, if you take that power, we're gonna punish you for it. But I want this power over here. No.
Sure.
Well,
I'm with you.
listen, all I'm going to say is this. If you're going to act a muck, you're going to have some problems on the international trading stage. You just are. And if you're not going to support Hong Kong, you're going to have some problems on the international stage. You just are. So it's going to be absolutely fascinating to see how that kind of plays out. But you did see some volatility in the Asia markets overnight. You saw some volatility in the European markets overnight, and in the U.S. markets when the cash market opened up. What do? We go up in price. So, on the overnight action, it was definitely selling off a little bit on the overnight action. But since the market opened up, the cash market, casinos open, gamblers are buying, and that's what's happening here. And, that's all I see here is just a bunch of degenerate gamblers chasing the dragon, chasing yield coming into the end of the holiday crush. And I'm going to say it right now. I said it before. I'll say it again. I'll probably say it again. We are not pricing in this trade agreement if it goes bad. We are not pricing it in. There has been no volatility on any negative news. And I still don't believe we're going to get a complete trade deal by the end of the election next year. So I expect something to happen eventually, but that is not going to happen right now or in the short term. Right now, you're in fade action. It's boring out there. Stay bored, stay cash flow.
Volume is lighting it up here in November, which is not uncommon as you're heading into holiday season. There's not a lot of earnings and all that kind of stuff, but the market just keeps chugging along in this parabolic uptrend. We're riding the lightning here on that intraday trend line. There's no question about it. And this upward movement in the morning, not uncommon. We've seen pretty much rallies at every market open for a month and a half, it feels like. I know that's not every day, but it feels that way as this market keeps chugging along. I will say this, I'm with you 100%, Matt. The U.S. Congress, the U.S. Senate, part of what we need to do as people is always lead when it comes to human rights. So I don't care what it does to the economics, period. But number two, here's a good example that we're not pricing in this trade war risk appropriately, and that this thing probably should not be in a parabolic uptrend. But the market is what it is. And right now it's still kind of very, very bullish. And I'm maintaining bullish delta. So am I buying the dip, not a pullback, but am I buying the dip? No, but I'm maintaining. Absolutely 100%.
Well, it's on the backs of repo actions, quantitative easing in phase one, right? I mean, it's not just the phase one of the trade deal that's really kind of driving this market. I think it's just one of those things. More than anything, I think Wall Street is like the New York Fed has our back. The New York Fed is, and I've said this before, I'll say it again. The New York Fed is the worst regional bank of all the regional banks. How they bail out Wall Street institutions nonstop, and Americans are not protesting over this like they are in Hong Kong. It drives me nuts.
Yeah, it drives me crazy as well, especially when you understand what happens on those PPT type organizations when they do that, and this market manipulation. That is infuriating at some level, but we can get into that here.
It's why Main Street America hates capitalism, Tim. It's why my daughter, who is hates capitalism, as her father is a stone cold capitalist. It's why she hates capitalism, is because in her entire life, as she's grown up from 10 years old to now 21, all she knows is corporate bailouts, stock buyback programs, increased dividends, quantitative easing, negative interest rates in a lot of environments. She's not growing up in a world of normal monetary policy, and that really, really scares me for the future.
Dow, S&P, NASDAQ, and Russell all look the same that they have in a few weeks, quite frankly. So let's move right into the currency market and talk about the dollar. The Federal Reserve has their minutes here today. You mentioned capitalism. You mentioned about this market manipulation. I'm not sure we live in capitalism, first of all, so that we could get into that.
There's a version of it.
Yeah. And here we are, Matt. Minutes are coming out in an hour and 20 minutes. Is there anything that you're going to be interested in? I know that you are a Fed nerd and you will read those minutes. There's no question about it. What are you looking for?
I'm looking for indications on what the pause means. That's what I'm looking for. If you'll remember on October 30th, when we when the Fed, I don't even know why I said we, the Fed isn't we. But when the Fed, reduced the rate one additionally time, 3 times in 3 consecutive meetings, they put a pause on it. And after they put a pause on it, I remember being in the halftime report saying this could mean one of 3 things, right? It could be just a one single time pause and they start lowering again. It could be an indication that they're waiting for more data to really kind of justify where they want to start pushing the interest rate. Or it could be something of a reflection point where they literally start increasing rates again. And we just don't know. We've seen these pauses in interest rate policies before, but and specifically back in the late 90s. So, from a Fed watch perspective, I'm looking for an indication of where the Fed looks to start moving the interest rate coming into 2028. I don't think anybody expects, and I haven't looked at the Fed watch tool lately, so I don't know what the projections are, but if you'll do that, that'd be great. I don't think anybody expects the Fed to act in the short term. Right. In 3 weeks from now, I don't believe the Fed is going to do anything. And I don't think the market believes the Fed is going to do anything. But what I'm looking for in the minutes is some degree of indication of what the Fed is going to be looking at 2020. My personal expectation is this pause is a short-term pause. I mean, it was just yesterday. I can't remember the Fed member who gave the speech, but he was talking about how even though the Fed interest rate is kind of where it needs to be, given what they're seeing, we're still very concerned about the slowing global growth, and absolutely 100%, they absolutely should be concerned about the global slowing demand and the slowing growth type argument. I mean, we did just come through a quarter of S&P 500 earnings where we saw, consecutive quarters of negative numbers for the first time since 2016. So, that slowing growth environment is real. I mean, I get it, guys. We're looking at the stock market, and stock market is at all-time highs, and the president is trumping about how this, is the greatest economy in the history of the world, and the stock market's, all of this, and the stock market's his personal report card, but that's not true. The stock market is not a reflection of the economic strength or weakness. The stock market is a reflection of a lot of manipulation and a lot of speculation. If you really want to look at an instrument that will allow you to understand the strength of an economy, you look at the dollar, and the dollar's been neutral for quite some time now. So, in looking at this, I'm looking for an indication of where the Fed's going to start pushing policy. If the Fed is indicating that this is a short-term pause, that they're going to start continuing to reduce the rate, markets will respond bullish in the short term, but in the long term, that is not a positive sign in any capacity. If the Fed looks at this from an economic perspective and they're saying, you know what, we need to continue to lower interest rates coming into 2020, that's a concern for me, to be perfectly honest with you. If the Fed maintains interest rates and like, hey, listen, we're going to handle this through, repos and quantitative easing. Like I said yesterday, I'll die a little bit, but that's a little different analysis. So
that's what the market's expecting, by the way.
I do too.
Last week, Jerome Powell came out and he said they're not looking to do anything until, midtime next year. So I think
he's a liar.
Well, they could change, but I mean, also this cut was supposed to be a mid-cycle cut and not
10 years after 10 years mid-cycle.
Yeah. The first cut, it was like, this is just a mid-cycle cut. I mean, we're not going into a cut rating or a rate cutting environment. And then 2 more cuts later, it's like, okay, now we're rate cutting.
And then quantitative easing and repo actions. Jay Powell, I hope you're watching. You're a coward and you're a liar.
Yeah, Jay Powell, I believed in you. You were going to be my hawkish Fed chair, and you disappointed me.
I hope he cries an additional tear out of that left eye in his milk this morning when he's staring at somebody.
Well, I don't expect much out of the minutes here today. I don't think you're going to get clarity on hardly anything, quite frankly. The Fed funds futures, Matt, on the CME group, they have that Fed watch tool. They're not pricing in a rate cut until June of next year. In fact, they have a 50% chance that even in June of next year, we're going to still be at the same rate. So that's what the market's
pricing. I just want to remind you guys and everybody listening to this right now, and everybody that is going to watch this later on today. I get what you just said, but if you remember the day before the last rate cut, they were adjusting that by 30 to 40% up or
Oh,
down.
it was crazy how much that thing.
So you guys can trust those little economists who are now a bunch of swing traders. I'm going to trust my understanding of the Fed and my understanding of the historical actions of the Fed far more than I trust somebody that basically just says, Jay Powell said we're not getting a rate cut till June, so that's the analysis I need to give. That's the biggest bullshit, lazy analysis that Wall Street economists and analysts put out there. I can't believe people actually watch and trust that shit.
Yeah, well, I mean, if going into this event here, by the way, are you going to buy the dollar? I would not, because if what you just said has any indication that maybe they come out and say they are going to cut rates or they're open to cutting rates, that's going to swiftly change that. So I don't know. I mean, it's not usually a big event. We're not going to spend any more time on that one, actually, because quite frankly,
I will say one thing. As we were talking about the dollar yesterday, is showing a little bit of retracement, and me and Cody were talking about it, and it obviously found a little bit of support, and you're looking at a little bit of a bullish retracement on the dollar right now. It's going to be interesting to see if that support level holds. A higher low would change the analysis a little bit for me.
Cody, would you buy this pivot right here?
I'd short the euro right here.
Well, that's the same
Cody
thing as buying this pivot.
What are you talking about?
Yeah.
So you're short euro, long dollar right here.
Yes,
is that right?
I am already in on that trade.
Candle trigger. I mean, you do have a nice little setup there. It's not one I would take it, but I understand why you would.
It's a small risk, like right below the 20 yesterday. Like it's cheap risk.
Yeah.
Why not?
Yeah, defining risk is always an important part of any trade. There's no doubt about it. I want to move on to crude oil here. Probably the instrument we need to spend a little bit more time on. There's actually some news on crude oil today. You had some stuff out of Russia in terms of them reiterating their, kind of opinion about how they're going to approach their OPEC deal, right, Cody?
So they basically said they're going to continue to work towards cutting down their production as they promised OPEC before.
Mm-hmm.
Now, who do we trust more, Powell or Russia?
I was thinking the exact same thing, Cody. Like literally, I'm not kidding. Like I was thinking, okay, after my diatribe on Powell, I was like, who do I trust more?
I still gotta trust Powell a little bit more than Russia, though.
I don't trust Russia at all. So I mean, no.
Yeah.
The ultimate question: who do you trust more, Russia or China? If you had to pick,
I would
obviously
take China.
We don't trust either one.
Okay, yeah, I don't trust either one, but
give me China. They've got more skin in the game.
I think I'll take China because China does want to be involved in trade around the world, whereas Russia doesn't have that much. Russia oil
just wants to be Dennis the Menace and meddle in everything. That's all Russia wants to do.
There were a lot of things I was planning on today. A Dennis the Menace reference was not one of them. I did not see that happen.
Dennis the Menace Russian analogy was not one of them. I agree with you guys. I think China wants to be accepted at the big boy table a little bit more. They want to be accepted as a major player in the currency market, the international currency markets. That's what they've been doing for 10 years. So yeah, obviously I'm going to trust China a little bit more, but I don't trust either one as far as I can throw them. Are you kidding me?
They're up. Crude oil's up almost $2 here, approaching that $50 trigger.
She are both big guys, Matt. I don't know how far you can throw them.
Yeah, listen, probably not.
I got old man blue collar strength, Cody. You don't know what that means yet, but you will in time.
Yeah.
All right.
Is there anything here on crude oil to trade? I mean, we're down to
no. I mean, you can ask me that every day for the next 6 months, and as long as we stay between 52 and 58 in a consolidation with the bands around 50 and 60, this is a cash flow environment for me. Yeah. I do want to say, we've had a lot of negative things to say about the EIA analysts who come out and project those numbers. Mm-hmm. 1.4. I just want to say congratulations for the first time in history that they nailed the bullseye. They were expecting 1.4 million barrels, and they got 1.4 million barrels. And for the first time, it's like a blind man throwing darts. They hit a bullseye.
And Marie actually in the chat here
actually count this time.
I'm just gonna give him credit. Give him credit. That's all I'm gonna say. But the news come out, Tim, very quickly.
The squirrel finds a nut. Everyone.
There you go. But the news very quickly. Russia indicates that they're going to maintain their cuts with OPEC. And what everybody around the world knows is they cheat that game all the time. So Russia coming out and saying that, obviously a little bit of a snapback rally, kind of covering the loss from yesterday. But is there anything to see? Like I said yesterday, I could see a trigger above 58, targeting 60, Tim, on a quick little day swing trade. I could absolutely see that. And so an aggressive trader like a Cody Mackey, in the currency market, who takes a stab on the dollar off its retracement, I could see an oil trader coming in above 58. You got a very clear trigger above that $58 mark. Look at that right there, consolidating between 58 and 57.75, really kind of trigger above that 58. It's not going to happen today, but I could understand somebody doing that.
Yeah, I would probably pass. I can understand it as well, but I'm going to stay with cash flow. Bull puts.
But you also don't day trade oil.
I don't. I used to do a little bit more. I've just found over the years, Matt, like you talk about old man strength. I like old man cash flow. I like just having positive theta, making my accounts easy to manage and all that kind of stuff.
That makes me think of, buying GE and getting paid a dividend.
Don't poke the bear over here. We're not buying GE, but it is what it is. I got you. Natural gas, actually, a nice little candle today, by the way, as we're staying on the energy market and commodities. Nat gas pullback, deep trigger. I'm not sure this is a new trigger. In fact, some technicians would say if you're below that red line, Matt, that moving average, you should not buy this pivot here. Is this an entry point for you?
I try to always let data do the talking here, Tim. And the blue line, for those of you who don't know what those lines are, the blue line is more important to natural gas than the red line. And sometimes the red line is more important than the green line. And sometimes the green line is more important than the pink line. And sometimes the pink line is more important than the whatever line. It's just every moving average has different connotations and different meanings for different traders. And so for me, and I was looking at this yesterday in the halftime report, but the 50-day moving average, which is that blue line, the 20-day moving average, meaning that red line, that to me has played far more of significant role in natural gas over the course of the last year than the 20-day moving average has. As you can see it, every time it kind of hits into that level, it's played a role. It hits into that level, plays a role. And now you're kind of sitting on that 50-day moving average, which just so happens to coincide with right there at that slightly significant whole number in 2.5. So 2.5 is going to play a role from a significant number. You got the 50-day moving average sitting right there as well. You got you're in the bull zone, right? For those of you who are new to trading, the bull zone is in between a rising 20 and a rising 50-day moving average. A lot of those times that coincides with the Fibonacci retracement right around that 50% type Fibonacci retracement level. So you're definitely sitting on a support level. Is it a trigger from a swing trade? No, I think you got to reclaim 2.6 and probably 2.63 where the 20-day moving average is. So if it's a directional play here, I would wait for confirmation. I'd wait for a little bit more conservative confirmation by reclaiming that 2.6 level. Is this a trigger for a credit spread? Absolutely, in my opinion.
Yeah, I like it here as well. In fact, on a scaling in type of position, which is what I like to do, Matt, I kind of had an aggressive entry last week, with some cushion. We've talked about that one. This would be, and I'm considering it today. I've not done it yet, but I'm considering adding to that position. I still have capital for my system that I would put more money into this trade.
If you're already in it, I would wait till it gets above 2.6.
Yeah, I've kind of hesitated on it to pull.
Yeah, I'm going to take a stab. I'm going to take a small position, but since you're already in it, I would say wait till 2.6, wait till maybe even 2.63, wait for that additional confirmation, right? But if you're not in it, I could see myself taking a stab at it right now, adding to it. If it does confirm you're already in it, I'd wait for additional confirmation.
I love cash flow. Let's move on to gold here. Gold has actually got a red candle here today. Lazy analysis, always dollar up, gold down, but that kind of is what it feels like here today, Matt. Is there anything else in this chart? I don't think it's confirmation for a trigger. I wouldn't short here. I know that you wouldn't either. What's your read on gold?
Same rate I had the last 2 days, Tim. I mean, we're waiting for 1475 by 1480, and like I said yesterday, we're going to climb the stairs there. I do believe that from a position trading perspective, somebody could take a stab here, no doubt. You're sitting at a weekly support level, but if you're looking at a little bit more additional confirmation to kind of get through some of this noise here. And there is a lot of noise here. You got that 2.9 level right there. You got 2.8 level right there, 2.75. These moving averages are absolutely going to play it. Excuse me, still overcoming the remnants of my sickness, but these two moving averages are certainly going to play a role in that, and that's right there at that 1500 level. So I think aggressively triggers above 1480, conservatively triggers above 1500. But you know, gold's got to shake out some of these technical patterns, Tim, and it might take some time.
You know, I'm going to give you a bunch of symbols, quick analysis on them, as well as a breakdown of any of the news that you've seen in them as well. Disney's launching their Frozen movie this week, and I find that to be interesting. My kids are going to go. I know they're going to go. I don't know if they'll go this weekend or not. They're probably going to make $1 billion on a movie over time. Matt, Disney's been a juggernaut. I still see opportunity.
Disney make a movie, they don't make $1 billion.
I know that this company just makes money. Let's just call it like it is.
Yeah, they print cash.
That's right.
Disney is the best. Disney is one of the most fundamentally strong companies that are out there in the market. Disney is also one of those companies that still has good valuation. And I swear to God, this company prints cash. They don't do anything that doesn't work out.
It feels like that. Literally, Star Wars, Disney Plus, you name it. Yeah, I'm with you.
Listen, Bob Iger, one of the best CEOs in the world, if not the best. Disney everything Disney touches is gold right now. You know, looking at it from a technical perspective, obviously everybody knows Frozen's coming out and the importance of all these movies to Disney. But, you know, you're forming a little bit of a flag-based pattern, maybe a high base between 145 and 150. I could see a new trigger above 150 here.
Yeah, 150 has a swing trade feel to it to me. I think that you could absolutely trigger there. I know you got a tail.
Disney owns ESPN. What else do they own? That's the one that they don't mint cash with is ESPN, Stephen.
Disney
and ABC.
That's right.
That's right.
Yeah, I mean they bought Fox assets, but they bought
Fox. Yeah,
they own some of the Fox assets, like the media type.
They don't own Fox News.
They don't own Fox News. No,
they own 21st Century Fox. They own the movie
21st Century Fox, the movie one.
That's right. Interesting one.
The entertainment one, right? Yeah.
Target had earnings, Matt. Target has been on our Tackle 25 list over the years, and here we are just having another great year, Matt. From January till now, the stock is almost doubled.
Juggernaut.
Broke out again. Juggernaut.
Yeah, Juggernaut.
Any reaction to their earnings?
Yeah, Target does everything great too. I mean, Target makes wonderful decisions. And, you know, we're talking about earnings per share coming in at 1.36 versus the 1.19. So beat on earnings per share, 18.7 billion on the revenues, beat on revenues. Obviously, market response was positive, and we broke out and we're running here. That's got to be called a run. I would call that a breakaway gap.
Yeah, it is definitely a nice gap. It's more than what Target can gap. But by the way, you nailed it yesterday when you said inverted butterfly. I thought that was a really, really good idea on Target.
Thank you.
Underpriced volatility, in my opinion. Urban Outfitters, another retail company. We knew this was the week for retail, and we've had some retailers coming in. Some missed, some hit, and really there's been a theme.
Here's the theme.
Yep.
Target's done great going into online. Does Urban even have online?
I'm not even sure.
There it is.
Even have a website. Yeah, I don't know.
And by the way, Urban Outfitters, it reminds me of like malls, right? Okay. Carl Icahn, who's cutthroat trader, wonderful investor. Carl Icahn just took and I have not read the article. I just saw the headline, so I'm fully admitting that right now. I need to go deep dive into it. And I do believe it was on zero hedge, so that might even be a little bit more kind of wait and see a little bit. But Carl Icahn takes a $400 million bet against malls.
That wouldn't.
I like his side of it.
Yeah. Yeah, that doesn't surprise me at all. I mean, these type of companies that have not gotten an online presence to where you can actually buy their product and efficiently and effectively online and have it shipped to your house, they're just not doing well. It's Macy's, it's Nordstrom's, it's Urban Outfitters, it's all of them. They've been really beaten up all year, and Urban had a nice
outside of cheap discount.
Yeah,
like cheap discount, Target, not Target, but TJ Ross, those types of things. But yeah, I agree with you. I mean, the difference here on Urban versus Target is Target's done a wonderful job of moving sales online the same way Walmart has. You know, these traditional brick and mortar retail stores, they've really struggled. And I just believe Icon's right. I think they're going to continue to struggle.
Lowe's had their earnings as well. Go ahead, Cody.
I was gonna say, Matt, did you look at Walmart's earnings? Because you mentioned Walmart as like, and that's Walmart and Target are the two that I always like to think, comparatively to one another. Walmart, when it had its earnings, it gapped up. Investors took the profit, they took the gift from it, and then they sold off, and it came right back into its range it was in before the earnings. Target gapped up, didn't sell off. People continued to buy that gap.
Target is a little bit more of a aggressive growth company versus Walmart, I would say. Yeah, both of them are fundamentally strong. I have not dove into Walmart's numbers. I was gone last week.
Okay, I wasn't sure if you had
into Target as much as I have targets. So that might change the analysis. And also a lot of times when you see gap ups like that and then a sell off, a lot of times it's because the CEO said something, to splash a little cold water on it. And I don't believe the Walmart CEO would say something stupid because he doesn't do hardly anything dumb. He's got them. I can't remember who said the Midas touch, but that man he's got the Midas touch as well.
Yeah.
I mean, yeah.
And he's our age, Matt. He's only like 40. The guy's got a long career in front of him. He's done a really good job with this company. Yeah. Yeah. I like them both, Cody.
I mean, Walmart's doing amazing things, but I mean, Target's not as consistent. Target will gap and, kind of stagnate for a while. But man, Target's up what? I mean, we're talking about 100% price appreciation year to date here on Target.
Yeah.
And we've just seen a technical situation on the backs of a fundamental situation that both scream buy here on Target. So whether or not the gap fills or not, I don't know. You got to read the tea leaves for what they are at the time. And when you gap and run out of a neutral condition, you got to call that a breakaway gap with the probability edge to the top side.
It definitely is looking that way to me. And you could make a case for both of them. I don't think you have to pick between one or the other.
Okay, you don't, but let's do that.
I would pick Walmart.
Okay, so you got to hold one, not trading. You got to hold one for the next year. 365 days. Okay, and whenever we play this game, you can't cheat by writing covered calls or buying put options to cover. Okay. So let's start with young man Cody. Cody, Walmart, Target.
Walmart.
You are the oldest young man in the history of the world. Tim.
I would take Walmart. I like what they've done. Market just took a hit, by the way.
Good. Give us a real pullback for the first time. Give us a real buying opportunity.
Give me the S&P, Matt, real quick. We'll keep talking Walmart, Target. Who would you pick?
Somebody check the news.
I'm trying to find it here.
It's tight for me, but because I'm a little bit more on the we're still staring at a recession type situation, I would take Walmart because that's the tiebreaker for me. Walmart does a lot better in a recession than Target does.
And that was actually my exact thought. You don't hear people thinking like, hey, we need to save money on groceries. Let me go to Target.
Yeah, exactly.
Phase 1 trade deal may not be completed this year. Trade sources say.
Really?
7 minutes ago.
Shocker. Yeah. Have they been watching the halftime report today?
Literally, maybe we're the source. Maybe we just got cited, Matt, because we did bring that up about 20 minutes ago.
We would be as good of a source as any other source in this debacle.
Down on Justice Brothers saying they don't like China.
We're gonna get hacked here.
No, I love China. I do.
Oh really? You want to stand on that?
3,000.
I love Hong Kong. I remember going to Hong Kong last year. Hong Kong is one of the most amazing, vibrant, and just massive energy cities you'll ever be to. I love Hong Kong.
Dude, I could break into We Are the World if you guys want me to. I'd be happy.
Cody
to
could
just
also
start
do a
singing
mock-up of him saying, I love China, while Matt says, I love Hong Kong.
This dip is not much here. Technical dip on the intraday math, 13 points at 3,100. I mean, we are now down about 0.6%.
Yeah, but it can spin.
Technical breakdown.
It can spin.
Yeah, something to pay attention to.
This is something we have not seen in recent history about the market selling. I love Chinese food too there, David. But this market, we have not seen this type of volatility and from an intraday perspective. This could spin out of control. And yes, finally, give us a real retracement. Give us a real buying opportunity.
Yeah.
I'm sick of just dipping toes in the water.
Yeah. Mandatory look at Roku each and every day. It is up 1.5% again.
Because of you.
It's becoming mandatory to me. I've become obsessed with this company. I can't stop. It's the number 2 stock by price and volume. It's holding that breakout, Matt. It is incredibly strong. We've had like 10 green candles in a row. It's just bullish. It is.
I'd take a trigger.
I'll tell you, I'd take Target.
Oh, that's a different discussion. Target or Roku for the next year. I would take.
No. You just keep saying is how bullish it is, and I'm like, I don't see it. Dude, I get it. The short term's bullish, but you're still underneath the all-time high of 176. You're still underneath in the last 3 months. You're still underneath the highest price that it's pinged at, where the entire market's setting up at all-time highs. And so I get it. It's up, 60% off the lows of 100. I get that. I see it. I see the short-term trend. I don't see a pattern you can trade. I don't see a trend that you can trust.
No, I don't think it's got swing trading setups either. It just doesn't. For some reason, investors just want to scoop this one up, though.
So why do we have to look at it just because you're obsessed with it?
It's the number 2 stock by price and volume today. It's traded more capital than Apple Computer.
So does AMD every now and then. Doesn't mean AMD is better than Apple.
AMD is up on that list here as well.
So is Beyond Meat. Doesn't mean Beyond Meat's better than Microsoft.
Speaking of some of those tech companies, by the way, you are seeing some weakness in tech here. AT&T is down. California had their lights go out. We've got some problems with this company recently. That is now breaking below trend lines, Matt, into support.
Yeah, it was on the backs of the downgrade. Then the people that work who actually invest in AT&T, because the active traders during the day, Tim, they don't invest in AT&T. They don't trade AT&T. Who invests in AT&T?
Dividend
people like our mom and our father who looks at the nightly news and said, "Oh, AT&T went down. Let me hit the sell button," and it gets priced in the next day. This is just carried through from yesterday.
No, as a matter of fact, I think you got to like that support point even on AT&T. On the weekly chart, the deeper pullback is setting up. And Matt, they do pay a dividend. Cody, I've wanted to play this game for a long time.
That dividend doesn't offset bad decisions. So
5.5% can do something for a company. I mean, it is a nice dividend.
So if a company pays you 10%, is that a good thing? If a company pays 10% dividend, is that a good thing?
It's not usually
no. Say no. It is not a good thing. That is taking money out of the company from doing more additional business. I've heard that argument for 20 years about AT&T paying a dividend and hasn't done a damn thing. So capture the dividend is boring. I don't care. Let me go look for something else.
Yeah. Baba down and Apple down and some of these other tech names down, Matt. As the market is turning over, I'm seeing the most weakness in tech. Just give me a quick look at XLK, if you will. I mean, we can talk Baba, we can talk Apple, but really it's just weakness across the board in the technology sector. It's just a pullback developing. Yeah. I mean, it's only 2 days here.
It's an intraday pullback. That's all it is.
Yeah, not much else here, guys. We got minutes here in an hour. We got market volatility kicking in a little bit. Maybe you can get some action off this sell-off, but here's the bottom line. Whenever we're down less than 1%, Matt, I'm not going to get worked up. I'm just not. I mean, even this 13 point.
Less than 1% is like the biggest move we've had in a month and a half, but I'm with you 100%. 1% is a morning day.
I mean, the S&P is down about 20 points from when that news hit about 30 minutes ago. So it is moving, and we do have red candles coming in here with some volume on the intraday.
When does the plunge protection team come in intraday?
12:30.
12:30.
Okay. Yeah. After lunch on the East Coast.
We'll see how the Fed responds with the minutes, given the fact that the market sold off one day. Bunch of cowards.
Yeah, we'll keep analyzing it. Cody, you had some quiz questions, Matt. You want to do that today? You want to kick that to another day?
No, we'll do it quick.
Little quiz, kind of trivia type thing.
So we're playing a little Trivial Pursuit here, Cody. Is that what we're doing?
Yep, this is just going to be a little fun one. Not necessarily a competition, just little fun banter. Just discuss it, go through it. Borrowing this from the website How Stuff Works, which is just a general trivia knowledge type website. I'm just seeing how we can do. So 2 ways I can do it. I can just ask the questions and we'll just talk about it, put the answers, or we can actually try to take the quiz and see what we score.
Let's
just-
let's just ask the questions and let the
question.
audience pop in as well. Let's have them play. First person to answer, just kind of put the answer in the chat. Let's see who can get them right as well as
All
Matt and I. Yeah.
Well, let's get started then. Where is the oldest stock exchange in the world?
It's a good question. I'm going to say the first company ever traded was the Dutch East India Trading Company, if my history is correct.
What's the question?
Where was the
I got
first
kicked out. I don't know.
the oldest stock exchange in the world? It's no longer open today. I'll give you that.
Amsterdam is the Dutch.
Isn't it the Dutch?
It was in Antwerp, Belgium.
Belgium. Okay.
It's Amsterdam.
Matt's like, I don't believe it.
I want that fact checked. It's Amsterdam.
All right, we can have that fact checked. Well, let me ask you this then.
It's in 16. It's like in 1605-ish, early 1600s.
This one opened its doors in 1460.
I don't believe that.
I think the first stock ever traded was the Dutch East India Trading Company. So 1460 wouldn't make sense to me. I want a fact check on this. I need somebody to snopes that out. It doesn't make
We're gonna have
sense.
to fact check this, guys. Anybody in the chat, if you want to fact check it, let me know while I read out the next question. All right. Where was the first U.S. stock exchange located?
I am going to say, well, we settled obviously in the Carolinas, but I'm going to say Boston. Feels like a Boston answer.
Matt?
Matt's frozen.
Matt's frozen.
Matt's gone.
I thought he was thinking very intensely.
This is now Frozen 3. We're launching like Disney. We're theme based this week. I like it.
Matt, do you see yourself? Can you see yourself?
No, I don't. I see a blank screen. Zoom's being whatever Zoom's being.
You're good, brother. You're good. First stock exchange in the U.S. What city?
Where's
I guess Boston. I guessed Boston.
Philadelphia.
It was Philadelphia. Boston was my guess too, Tim.
Don't question my historical knowledge of markets.
All right.
Well, that's the whole point of this game. It literally is to question your historical knowledge of markets.
You question Amsterdam.
Like if you had a sub tag on this game,
Amsterdam.
first of all, the whole thing, like if you were promoting this and you were in marketing, you'd be like, the game is to question your historical knowledge of markets. That is the point of the game. Cody, third one.
All right. Third question. What was the first U.S. company listed on the New York Stock Exchange?
Edison. Consolidated Edison.
Interesting.
That's a good guess.
That is a really good guess.
Not correct, but it's a good guess.
Yes, it is.
I don't know the name. I don't.
Website, Cody.
Well, the answer they have is the Bank of New York.
Bank of New
York. Lies and accusations.
Lies.
Fake news, Cody. Fake news.
All right, here's a softball. What is the largest capitalization stock exchange in the world?
Really?
Yeah, it's a softball. Come on, let's move on.
The Brazilian Stock Exchange.
Yes. No.
I'm sure that's what that how stuff works website.
It is the New York Stock Exchange.
New York Stock Exchange.
Of course.
All right. Let's see here.
What's the biggest one outside the U.S.?
I don't know.
Shanghai.
Would it be London?
I would guess.
There's a lot of
London.
companies listed in London. So
London's target.
yeah, London, Shanghai,
probably.
the Nikkei. I mean, that's an index.
Yeah, that's up there.
Tokyo.
London, Shanghai. One of those. Probably London.
Yeah.
All right. Let's see what we have.
Outside the U.S. exchanges, obviously.
Is insider trading ever legal?
No.
It sounds like a trick question.
You're going to say yes. And
I'm gonna say
say
yes.
It's
I'm gonna
a
say
trick
yes.
question, and what it is it's legal in the sense that employees can buy shares of the
That's
company
not legal.
that they.
That's not what insider trading is. And that is not, your website is really bad. Really bad. I can't believe people go to websites to get truth these days.
Oh, there's so many of these that I'm not even reading just because they're not relevant. B, it's not really. Who cares?
How many more you got?
Actually, I will just wrap it up with one more.
One more.
And I will simply say, which is the federal agency that regulates the stock markets?
The SEC.
The SEC.
The answers they have on here are try to trick you. They have, the Federal Reserve, the Federal Trade Commission.
I think they're trying to trick themselves because they're not accurate in their historical responses.
Yeah.
I think they literally just Googled and Wikipedia'd and somebody said it one time. The first stock exchange in the world was Amsterdam, 1610,
Well, we had a student that pulled up in the chat 1602, but let me
1602. I know it was the early 1600s. I know that.
Oh my God! Stop scrolling me down.
And I'm fairly certain Consolidated Edison was first stock trade on the New York Stock Exchange, and I'm fairly certain that was 1792.
Okay, let me look this up.
Now we're not going to Google. Send us out to you.
Yeah, Bank of New York is what they say on Google, but I think Edison does sound like the right answer. I like stuff like that.
What if when they open their doors, they just had a bunch listed, and that just like, you know what I mean? If they open their doors, it's not just
I have no clue.
Day one.
Yeah, it's fun. I love games. In fact, me and my kids, that's
fun.
one of my favorite things to do is play games with my kids and talk about, quizzes and all that kind of stuff. We play a game called the quiz game when we do road trips, just like this, Cody. But I usually kind of give them 4 answers, and then we break it down to 2, and they only get 3 points, 2 points, 1 point. So keep bringing the games on Wednesday. Let's make Wednesday a game day. I think that'll be fun in our halftime report moving forward. Guys, thanks for being here. Markets are moving. Keep an eye on the intraday charts. As of right now, it's an intraday sell-off. We'll see, but be aware of where these markets are. We're up at a high point. Things have been strong, but I don't know if we're pricing in the risk. I'm approaching it with theta. We're going to come back each and every day and analyze the markets, go through the news and the charts and answer questions and have some fun doing it. Tackle Trading's halftime report is a daily show. Come and join us. And if you are watching right now and you're not a pro member of Tackle Trading, I've got a call to action. There's no reason not to be. I mean, what are you doing? The reality is the pro membership at $97 a month, you can get a 15-day trial. You can put your butt in the seat and go and learn directly from coaches and mentors who are expert traders.
It's very simple for me. People spend thousands upon thousands upon thousands upon thousands of dollars for what we provide for $97 a month.
Yeah. Yeah.
That's and if you don't believe me, ask any one of our pro members.
Yeah, that's right. And if you're a pro member right now, just type in pro member in the chat. I know that we've got a lot of you out there. And the other thing is if you're a new trader, we've got courses, Matt. We have courses like the STEP system and the 7-step guide to trading that can give you a methodical process-based way to learn the markets and go and dive into those.
Tim, I was talking to Mark, who runs our customer service, and he's like, Matt, we need to do this, this, and this. I'm like, okay, we need to do lots of things, obviously, but the simple reality for new traders who are struggling with technology, you need to put education first. Yeah. You need to put your butt in that chair and go watch the 8 hours of the STEP system so you don't have to ask those types of questions.
That's right.
It's people when they put application before education, there's a reason they never succeed. Like literally never succeed. Sit your butt in that chair and go watch the STEP system. It'll teach you how to place order entries. It'll teach you how to do bracket orders and contingent orders and everything else you need to do. So Mark's like, we need to do this class and this class and this class. And I'm like, no, they need to sit their butt in that chair and they need to go through the process of education. That's what they need to do. Mm-hmm. And when people put application before education, they're going to pay their tuition to the market instead.
Well, and the reality is, guys, we give you a 15-day trial if you're not a pro member yet, because we know that if you'll actually use it, you're going to love it. You're going to stay with us for a long time. So go give that a shot. There should be a link right in the comments below, and then dive in and use all the resources. By the way, if you are a pro member, here's a quick reminder. We launched that playbook last month. Make sure that you've been using that content and going through and using that resource, and download the playbook PDFs as well. Great job today, Matt. Great job, Cody. As always, we will be back tomorrow, guys. Have a great Wednesday, and we'll see you on Thursday. Theta Thursday, we're going to do the poor boy cover call, Matt. We're out.